If you've had a bankruptcy, foreclosure, or short sale, can you still get a home loan? The answer is yes. My name is Todd Baker, certified mortgage planner with Service First Mortgage. Please subscribe to my channel and like this video. And if you're getting it by email or social media, go to my website at yourcertifiedmortgageplanner.com. So in this video, I'm going to discuss the wait periods for what's called significant credit events. That would be a foreclosure. That's when you've lost your house, the bank has taken it over through a procedure and has resold the house. That's a full foreclosure. A bankruptcy can be a Chapter 7 or a Chapter 13. A Chapter 7 is what's more common. That's when you've completely dissolved all of your debt and you're starting over. And then a short sale or a deed in lieu, that's when you just give your note back to the bank or you sell your property for less than what it's worth. That was a big thing during the housing crisis when people were upside down. You don't see a lot of short sales these days. Normally it's foreclosures and bankruptcies, and most of the foreclosures and short sales that did occur, the time frames are now gone. But let me show you what they are so you know what you're dealing with. The most common one, by the way, is a bankruptcy Chapter 7. So there's different loan types. So for conventional Fannie Mae and Freddie Mac, it's going to be 7 years on a foreclosure. Freddie Mac has 10% down, but there's some other extenuating circumstances that are hard to prove. So plan on, if you've had a foreclosure, if you want a conventional loan, it's going to be 7 years. For FHA, it's 3 years. So let me comment on that. The thing about it is FHA is a great home loan program. It has a mortgage insurance premium. In some cases, it's a little bit higher per month, depending on your credit score, than conventional. But it's a great way after foreclosure to only have 3 years. You can buy a house. You can always refinance it later on. For a VA, if you're a veteran, it's only 2 years. And for USDA, which is a rural program, it's 3 years. So a short sale or a deed in lieu, it's 4 years with no loan to value restriction for Fannie and Freddie. Fannie does have a 2 years with documented extenuating circumstances, but those are really hard to prove. It has to be like a major health issue, and you literally have to like show your health records. I've never met anybody that actually could prove that. For FHA, it's 3 years, VA 2, and USDA 3. Now here's the biggest one for bankruptcy. So for Fannie Mae, it's 4 years from discharge date. FHA is 2 years from discharge date. VA is 2 years, and USDA 3. I want to talk a little bit about bankruptcy while we're on this topic. So when you've had a bankruptcy, first off, you should only do a bankruptcy if you have an insurmountable amount of debt and you really need a fresh start. Bankruptcy is a great tool. It gives you a significant level of protection from liability from creditors under federal law. It is a very powerful tool to use when needed. It does not get you out of IRS debt or federal student loans, but it'll pretty much wipe out everything else. So there is a time. Now I do see people sometimes will do a bankruptcy for a relatively smaller amount of credit card debt. I mean, if your credit card debt is relatively small, and I mean relatively, it could be 10 or 15, even 20 grand, it's better to pay that stuff off, because what happens when you file bankruptcy, these waiting periods, yeah, you can get into an FHA loan in 2 years, but more importantly, it's going to stick with you 10 years on your credit history, and it'll put a cap on your score. If I see anybody I see that has a prior bankruptcy, usually can't get their score past about 725 until that's gone. So it restricts you on the upper tier. It affects home and RV financing if you want to get an RV. It's not that you can't get it, but you're going to pay a higher interest rate. So only pull the trigger on that when you really need to. The second point I want to make, if you've had a bankruptcy, it is super, super important to make sure that you pay your post-bankruptcy accounts on time. That's really, really important. I see people that go through bankruptcy and then they let things lapse. If you let things lapse after bankruptcy, you're considered a really high credit risk, so be very cautious. The last one is the Chapter 13. That's where you work out, usually it's a 60-month or it's a predetermined payment plan through the trustee, through the bankruptcy court. For Fannie Mae, it's 2 years from discharge or 4 years from dismissal date, because sometimes those are dismissed. Same thing with Freddie Mac. FHA, 1 year of payoff must elapse. So there is a caveat to the government loans, and that is the government loans will allow, if you've been in bankruptcy and you've made 12 payments, if your credit score is good enough, you can get a loan. You have to go to the trustee and get that approved, but that's a pretty standard procedure that your bankruptcy attorney can facilitate. So there is, if you're in a 13, you've made all your payments on time and your credit score stayed relatively good, you might be able to buy a house. And I've helped a lot of people do that. So that is a caveat. So Hope you find that helpful. Once again, subscribe and like. Go to my website, yourcertifiedmortgageplanner.com, for some great content on home purchasing and building credit and everything related to wealth creation is there for you. And I hope you have a wonderful day. Please feel comfortable reaching out to me if you need any help. And we will look forward to meeting with you. Take care. Bye-bye.